In today's episode, we're going to look at how many bank accounts do you need. We're also looking at why is it important to have more than one bank account. The point of having different bank accounts is to organize your money. In the same way that you have different rooms in your house, and you know that in the dining room, this is where we have meals, in the kitchen, this is where we cook, in the bedroom, this is where we sleep. Similarly, this is what different bank accounts do for us. They organize our money and we know what to use each account for. Let's jump into this episode and look at this in more detail. Welcome to the Personal Finance and Coffee Podcast. I'm your host, Gabriela. On this podcast, we talk all things money and finances. Learning how to manage our money and make it grow is a skill that can be learned, that we can get better at. In our environment, money is kind of like a taboo topic. So on this podcast, let us have the conversations. Let us dig deep into how does this really work. We're going to have guests and learn from each other. I encourage you to listen and enjoy the podcast. Remember, you are the CEO of your money. No one else can manage the money for you. Welcome to today's episode. And this episode, we're looking at bank accounts. How many do you need? Do you need more than one? Different people organize their money in different ways. And today I'm sharing my perspective. Personally, I feel like we need more than one account. And I'm going to share the reasons why I think this can be helpful. But there are those who feel like, why do I need more than one account? After all, every bank has like bank charges. And when I talk about accounts, I don't necessarily mean that all these are going to be bank accounts. Some of them can be unit trusts. It's a place that holds your money. Yeah, I agree. Some banks have charges that don't make sense. I've closed a few accounts and I've tried a few versions. I've kind of narrowed down what works for me. So let's start with the benefits. I have 4 benefits that come with having different bank accounts. The first is that it makes it easy to track your progress on your saving goals. If you have an account where you put money that you're setting aside to start a business or buy land or buy a car, you can see the money grow and you're like, oh, I'm actually making progress towards my goal. So having different accounts helps you track your progress towards the goal that you're trying to attain. The second is that it reduces the chances of misspending or overspending. Sometimes you can have money in your account and you're like, oh my gosh, I think I'm loaded. And the next time someone is like, oh, let's do this. You're like, yeah, let's do this. And then you go for a wedding meeting and suddenly you're feeling very loaded because the money looks a lot. And so you give more than you ordinarily would have. But the money on that account is actually attached to different goals. But because it's all together as a lump sum, you're not keeping track of this much is for this goal or for this purpose. So it reduces the chances of misspending. And then the third benefit that comes with having different accounts is that it makes it easy for you to make decisions. When a person asks me, can we do this? Immediately I can know if on my daily use account, I have money for that. Or if I don't have, so I can say, oh yes, I can do that with you. Or I can say, no, I may not be able to do that with you. So having different accounts makes it possible for you to see if there is money for the activity that you want to go for or for the item you want to buy. You're able to decide faster. And then the fourth benefit that comes with having different accounts is it gives you motivation. You know, when you're seeing, oh, this account is increasing, it's growing, I'm about to hit my target, it gives you motivation to keep going, to keep working towards it. So that's another benefit that comes with having multiple accounts. Now, let me get into the types of accounts that you can have. At the end of the day, everything that I'm sharing with you right now is simply my point of view, simply from the experience that I've had. You can take this information and find a version that works for you. I hope you find like a few like, oh, actually I hadn't thought about it like that. Maybe I can try this. You can try it. And then if it doesn't work, you're like, oh, that doesn't work for me. This podcast is made with the intention of sharing different perspectives, and then you can find a decision that works for you. So the first account that you need is a checking account. Probably most of you have this one. This is where you receive your money. This is where they pay your salary, or if you're in business, this is where they send you money. Now, this account is for day-to-day use, day-to-day living. You need to buy this, you're swiping your debit card, day-to-day expenses. Now, this checking account should be preferably in a bank. Some people don't like using banks. They're like, I can use my mobile money. But a checking account helps in that. You receive payment and you start from there. So this will be a bank. Choose a bank of your preference. Then we have the short-term savings account. This is where you put money that will bail you out. You know, when something happens and you're like, I need something to bail me out. This is what the short-term savings account is for. It can be money that will bail you out. It can also be money that you're like, oh, I have a birthday coming up in June. So let me start saving money so that when the birthday comes up, I have the money. This is where you put the money in that short-term savings account for goals that are not very far. Maybe you want to buy a new phone and you're like, oh, I need like 3-4 months to save towards buying my new phone. So you put the money in this short-term savings account. So this short-term savings account also helps you attain the goals that are not far. Then those 2 accounts are in the bank. Now the next 2 accounts I'm going to talk about, you can choose to have them in a bank, but I feel like they're better in a unit trust. A unit trust is where they collect money from different people and then they invest it in treasury bonds, treasury bills, in the stock market, buying shares of MTN, Stanbic, and then every month, every day you receive interest on that money that you have saved. So places where you can get unit trusts, this is Britam, UAP, ICA, there are different places which have unit trusts. So the advantage with this is that you will not have any of those bank charges, and because you already have the 2 accounts, it means that money that you put in a unit trust is not the kind of money that you'll be withdrawing every day. The other thing about unit trust is that when you put the money there, when you need it, you're able to get it. It can take you about 1 to 2 days to get the money back, but you will get it back without having any charges, and while it's there, it will earn some interest. It's not much interest, but at least it's not losing money. The third account is an emergency fund account. An emergency fund account is where you will slowly put money that will be used in the event of an emergency. Everyone defines an emergency differently. An emergency can be a medical emergency, it can be a robbery, an emergency can be an accident, something that you could not have foreseen. It could be a death in the family. It is something that you could not, it could be a loss of a job. We all went through COVID. It could be the business is not earning and yet you need to survive at home. Everyone defines an emergency differently. This is an account where you will start to slowly set aside money for in the event of an emergency. You will decide at which point that money is enough. That is the third type of account. So the first one was a checking account, daily use. The second is a short-term savings account. And then the third is an emergency fund account. Then the fourth account is the long-term savings account. The long-term savings account should also be, in my opinion, in a unit trust. You could have a unit trust maybe in Britam, and then you also have a unit trust in UAP. And these long-term savings accounts is where you save for the bigger purchases. If you want to buy land, or you want to start building a house, or you want to buy a car, you don't want to have that money saved up on your checking account. You get what I mean? So you can have this money that you start saving up to either maybe you want to invest in a business and it requires a large sum of money, or you want to buy land or a car. This is where you will have the long-term savings account. This is for like goals that will take you longer or that need a large amount of money, and you don't want to mix this money with the rest of your money. So those are the 4. Then the 5th, this one is really optional, I think. The 5th is a business account or a side hustle account. So if you have a side hustle or if you have a business, this is where you would put the business income. Now, it's important to separate the business money from your money, because your business may not be able to grow, because every time the business makes sales, you feel like, oh my gosh, I'm so loaded, and then you spend the business money. But you have not separated that this is a business earning and the business needs to grow. You need to reinvest in the business. It's okay when you have a business account and the business has made more money, then you pay yourself into your checking account that we talked about in the beginning. As an owner, you pay yourself from the business account to the checking account. You can pay yourself a salary or you can pay yourself a dividend, but being able to separate the two, you can also see if the business is growing. You can see that, oh, last month on the business account, this is how much we earned this month. So you can also be able to compare and assess and see. So those are the 5 accounts that I have. And it also helps in the event that you're not employed and maybe you do side hustles or you do commission-based earning, or you have a business where you make sales and some months are high, some months are low. Having these types of accounts also will help, because your business account will receive the business income and then you can pay yourself a salary. So on the months when the business is high, you pay yourself the same salary. So when the business has earned less, you're able to pick from the previous month where it earned more and your salary is the same. It's able to give a level of consistent income even when you're self-employed, even when you're in business. So those are the types of accounts, and the whole purpose of doing this is to organize your money so that as you're working towards your goals, you're able to have clarity. This is for this and this is for that, to avoid the crisscrossing of the lines. I How many accounts do you have? Do you feel like this makes sense, or you're like, but those are way too many and I just can't start trying to organize which account has which money in my everyday hustle? Is that what you think? Please share in the comments. It would be interesting to listen to your point of view. How many accounts do you think a person needs? Are these too many? Are these too few? I hope this has added some perspective, given you a few ideas. And if you've liked this episode, if you've picked a few things, please like this episode. It really does help the channel. You can subscribe so that you don't miss the next episode, and I'll see you in the next one. Bye bye.